Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. And I've put together the top 7 key market drivers I look at when analyzing a new real estate market. Go to sethferguson.org to download your free copy. Our guest today started with a single-family investment property in Florida and now syndicates apartment buildings. He works with passive investors and sources opportunities for investment. John Fortes is the founder of Community First Investment Group. John, welcome to Purchase to Profits. It's great to have you on the show.
Thanks, Seth. Thanks for having me, and I'm looking forward to it. Let's do it.
Yeah, we're really looking forward to this. So let's jump right in. Tell us about your real estate goals right now.
My goals right now is to basically it's not ideal, but it's learn as much as I can, right? So, yeah. And that's what I'm doing with each deal. So each deal is allowing me the opportunity to learn more and more and more. So that's basically my goal. It's I don't have a number, and no one going into the year, I'm sure you saw this all over the place. My goal is to have 1,000 doors. My goal is to have X amount in cash flow. My goal is to basically learn as much as possible.
For sure. Yeah. And, I think your situation is really good for our audience because we have lots of beginners, like just getting going in real estate investing. And like you said, every deal is a learning experience, especially at the start, because you've got such a steep learning curve.
Absolutely. So the biggest learning curve is to accept partnerships. And I think a lot of newbies come in and they think, I'm going to do it by myself, right? I'm going to syndicate 1,000 doors first deal. And that's not realistic without the partnerships because of all the moving parts and all the different things that you need for criteria to be met. So I'm sure you can understand and relate to that.
Oh, 100%. And I think too, a lot of, entrepreneurs in general, they kind of want to, it's their baby. They want to do everything on their own. And then, they almost limit their own business growth because they're trying to be a one-man show. It's only like when you bring in other people, partner up and stuff, that's when you have the huge exponential growth.
Yeah, you can go further faster with many. So that's how I see it.
Yeah. And right now, like what sort of product are you concentrating on for your real estate?
It seems like what everybody is focusing on, but we're very strict and we don't let the shiny object like carry us away with like storage and other mobile home parks. We're focused on value add C2B properties.
Yeah. Yeah. And what, because, you started off investing in a single family home. So what caused you to shift going from that single family to now, going after the multifamily?
That's literally probably my favorite question because I didn't want to do that 100 times. I don't want to sign paper, 1 million papers with each deal. So that was the driving force, and it was so easy. I was like, when you hear about the closing of a commercial property aside from a residential, you're like, wait, hold on, like. That's how many signatures it takes? Oh, come on.
Yeah. So basically, so you did the one single family, and obviously it was a big hassle to do. And then right after that, you were like, hey, listen, like, so who introduced you to multifamily then? Because a lot of people get started in the single family first.
In the middle of closing that deal, I came across several podcasts of multifamily, and it didn't hit me till I actually closed. And it was almost like everything just slapped me in the face right at closing and said, yeah, you could do 100 of these and keep going or whatever, but it would be easier if you listened. And it just kind of like really, really made sense right at that time. So that's when I immediately called my business partner and said, look, you have a single family, I have a single family. Let's focus on multifamilies. Yeah. And what was funny, he goes, that really makes sense. That like immediately it made sense to him.
Yeah. Yeah. Well, it's kind of like Gary Keller has a good book, The Millionaire Real Estate Investor. And he talks about, just being able to scale up using the multifamily model. You can start off with the single family, but, once you hit a certain point, like it makes way more sense to have everything under one roof.
Absolutely. And That was another thing too. I read like 60 something books in a year, the year before. So I went through self-development, real estate, any type of book that was really going to improve growth
Yeah.
and my learning. So I'm a savage for learning. So
Yeah. And how did you find, because a lot of people are in the spot where they have the book knowledge, they read, they do a whole bunch of research, and then, but they don't have that real world experience. So how did you find, reading all those books and then doing your first multifamily deal? What was it? Did it turn out how you expected?
does anything ever turn out the way we expect it? No,
Never, but I have to ask.
no, it doesn't. But that's where you come and you learn that experience. Everything is gonna be different, and as much as you can, I tell people this: when you're going through your first process, document everything, and then that way, when you're going through it again, you can trim the fat. Nope, I didn't. That was a waste of time. That nope. All right, good. Streamline that. That's the way we work. Actually, that's the way I work because I just want to be able to do something better, faster, and more efficient than I did before. So I don't know if that answers your question, but
Yeah.
yeah, I'm just trying to make things and processes and the systems better.
Yeah. Well, the documenting is a really good tip. Do you have any other routines or rituals that you've developed?
Yeah, I try to wake up and meditate and work out every morning just to get some clarity and de-stress, decompress, and all that. I do a lot of running. I'm starting to focus into a lot of lifting and just kind of. I feel like that's relieving the stress right now. So going from there, I do a lot of reading, a lot of listening to podcasts, and when I'm in the car, I call it commute university. So I do a lot of audiobooks.
Yeah. Yeah. And how long have you been doing the meditation for? Like quite a while?
I did it for consistently for a year, then I slacked off for like a month, and I know you can feel it, like you're not balanced or centered, and it's just I know what I got to get back to it, and then I really get back on my routine. So not a closing a deal. It's not ever efficient and streamlined and easy. You always have to improve yourself,
Yeah.
even because you slip up, I slip up, and a lot of people don't talk about that, right? So that's what it is.
Yeah. Well, and what I found too is that, like you said, everybody slips up, but I find the most successful people are the guys who get back on track sooner and more consistently.
Yeah, the faster you recognize it, the easier it is, and now you know. Like I have things in place where when I feel a certain way, my body's telling me something, I can boom, correct it. Let's correct it. And that's basically what we do in business. When we know we're not lining up accordingly, we correct it, we fix it, we improve it.
Yeah. No, I absolutely. So what would you say is your biggest challenge right now in your business?
Finding deals.
Yeah.
I think that's everybody's challenge because of how compressed the market feels right now. So everything feels a little squeezed and tightened. But the best part of it is, looking. The best part is the hunt, right? So when you're hunting for it and you got a deal, when you get it under contract and all that, and you bring it home, you're excited to do it again. It's almost like it's feeding the fuel for the next time it happens, right? So it's finding the deal. It's the hunt. It's the thrill of the chase.
Yeah. And so what strategies are you using right now? Because like you said, it's so tough to find a deal that pencils out. What are you doing right now to maybe, get an edge on somebody else in terms of deal flow?
Communicating, communicating with whoever we're interacting with, whether it's the PM, the broker, the brokers, I should say, and trying to get into that exclusivity club or whatever you want to call it to be able to get those better deals, those better opportunities, and partnering people that have opportunities. We're very picky on who we work with because we want communication to be the number one objective, and you have to fit into how we communicate.
Yeah.
So that's basically how we work now. So yeah,
Yeah.
communicate.
And what for you makes good communication? Like, do you have, like, do you have criteria like, okay, like I need to communicate to all my investors on a monthly basis? Like what is ideal for you?
Yeah, we send out a monthly newsletter. So sometimes in certain months we send out two newsletters, whether it's just like an update into something we're doing or a conference we might be going to. We want them to know exactly what we're doing and how we're learning and how we're growing. We also send out communications if, for instance, we were 200K apart from a deal. We send out a communication on that. It only has to fit the investors, right? So we send out their monthly newsletter and share an article, our favorite article of the month and all that. But if we find something where we hit a wall or something, we'll share that with our investors just to let them know that everything's not rosy, so we do go through things, ups and downs like everybody else. So
Yeah. And the number one, I guess, misstep I see a lot of people making is, like you said, when things go wrong, they usually get quiet and they don't communicate that. But, if you're having an issue, like, that's the time where you want to over communicate and really go that next step. And I find, people appreciate it, but they also, like, it gives them a really good view as to what exactly is happening. Because I've just found if you don't communicate, people start imagining things in their head that are usually different from the truth.
absolutely. I mean, just think back on your personal friend's experience with that, right? Like, oh, how come you didn't tell me? I thought blah 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 happened, right? And you're like,
Yeah.
oh no, it was fine at the end of the day. So if you
Yeah.
don't communicate, that's the biggest thing that could move a passive investor away from you or toward you.
Yeah. No, 100%. And you said you're really picky with who you're working with. Let's say somebody's brand new, they're a beginner. How would you suggest they start considering partnerships and approaching people?
Well, I tell them really to invest in someone's opportunity, because that right there, it makes it easier to say, look, if I have these returns and this is what I'm getting on a monthly basis and I'm getting that, and this is what I've already received, would you be interested, or do you know anyone interested in, something similar to this? Yeah, my cousin, my sister, my brother. Oh, you know what? I'm interested.
Yeah.
So, uh, what I like to say is, if you believe in the process, why ain't you investing in others?
Yeah. Yeah, no, that's so true. And, especially in investments of this type, you have to have, skin in the game. You can't just be running around raising money without anything, without your own capital at risk.
Absolutely. I actually feel like that's a better process to get investors than actually creating like a sample or something like that. You know what I mean? Because
Yeah.
it's a proven concept and this is what you're actually doing. And your friends and family are actually going to believe what you're doing more than something you created, right?
Yeah. No, 100%. So let's hop over to a Keystone Deal. So a deal that made a big impact on you and your business. Is there one that comes to mind?
Absolutely. It's the 62 unit we're currently renovating. It's a dead asset, which means it's not performing, no tenants, no nothing. We've already had 2 capital calls on it. And like I said, every deal is going to help you learn something. And this one's helped us to learn a few things of how we could have tackled it from the beginning, and learn a few things on how to work with not broken contractors. So that's why we have the 41 unit that we syndicated, and that's like smooth sailing, and it's nothing to talk about. Like it's weird when you talk about syndication. I'm like, okay, yeah, it's performing exactly as expected, and blah blah blah.
Yeah.
But the one that I really like to talk about is the 62, because it's not producing anything. There's no tenants. We're finally leasing up the building 1 as we speak right now. Building 2 and building 3 are going to be renovating next. And the reason why we had to move away from everybody moving out of it is because all the decks weren't up to code. So we got people out of building 1, and we were renovating it, and then people saw that and was like, okay, we're gonna leave, let's go. And it was a mass exodus, and people didn't pay and all that, and it happens.
Yeah.
That's business that a lot of people don't speak about. But if you go through it, you know how to handle it the next time. How could we stagger it the next time? How could we communicate better to the tenants next time, saying, hey, we'll give you an opportunity at building 1, just stay in place. You know what I mean? Maybe if we share that a little bit more, it might have been, beneficial for us instead of 2 capital calls later, right? So
Yeah.
that's what I really like.
For sure. Well, take us back to you actually sourcing the property. How did you come across the deal? Was it direct to seller through a broker?
It was actually a LoopNet deal. One of our partners brought it to us, and we came in and we helped put it over the top with the closing. So our team vetted the opportunity with them, and we saw the business plan. And it was basically, it's a heavy lift. So we got it at a really good price, and we're going to turn it into a well, the pictures look really sweet right now on the renovated unit, so it looks way better than what we got it for, because we're turning units as we're doing, as we repair the decks and stuff. So yeah.
Yeah. So I guess when you first, when your partner approached you with the deal, it was, was it the price that really stood out, or was it the fact that, hey, like, I see a lot of upside? What was the big blinking light?
Well, after we underwrote it on our side, it was the opportunity to be able to be a part of something special in the community that we're already a part of, right? So everybody that's part of this deal in the community, we're all close. We have our monthly meeting, and if we can't make it, we get updated with the email, and then everybody's so genuine to the point where say no one can make the meeting, and we get the monthly email from them, and then feel free to call me or text me if you have any questions or any ideas or anything. So we're all part of the process, we're all learning, we're all growing, and this was everybody's first major deal, so that's what makes it a special project to us.
Yeah. And talk to us about the capital calls, because you've had 2, and it's obviously that's, nobody likes to do that. So walk us through kind of why you needed to do that and how you approached it.
Well, the approach for the capital call always, you have to have all your I's dotted and T's crossed, right? So you have to come to the meeting with everyone, and you got to explain exactly what happened and tell them what the issue is, and then tell them how we're going to solve it. And, everybody's so on board with making sure this process and this project works and is successful, that you send out an email saying, hey guys, we're having this email, like, we have this meeting, we have to discuss, maybe you throw off something light in there in the communications, but in the meeting, you have to hit them with reality. You got to be clear and concise. And sometimes even what's best is we will call each other and just make sure everybody's, guys, this is what's happening, So it's not just waiting till the monthly meeting, and it's not just waiting till an email comes up. It's definitely a call, because we're all so close anyways. We're on a group chat where we call, most of the partners speak to each other on a daily basis, if not, weekly basis. So communication is really, really key, especially on a capital call, because you don't want to get blindsided and be like, hey, we need 25 grand now. All right, now we need 50 grand now. Like, no one wants that. No one wants to be spoken to only when they need money, right? Yeah. So, hey, you're asking me for money again. Come on. If you tell me exactly, and we all feel involved, so that's another thing on why it makes it more special for us to easily, have those tough conversations.
Yeah. And was it, did you have to go the capital call route just because of the mass exodus? Is that what it was, or you didn't have reserves?
Yeah. So our reserves did not indicate for the mass exodus, right? We didn't plan for that, and no one ever does, right? But now you can, because you learn from it. But what happened was, it's a bridge loan to get us to wherever, and the amount of occupancy that was in the buildings right now, I mean, at that time, were making us break even, and we were great with that, right? And we were okay with emptying building 1 to work on it and breaking even with everything else. So it was completely flat asset at that time. and we were good. And then when the mass exodus happened, we had to pivot and really, you know, raise a little bit more. And then we looked into, because we had a great relationship with another lender, we looked into seeing, well, one of our partners did, seeing if they showed interest in having us refinance under them. And when it was all said and done, that didn't happen. And from there, that's when the second capital call came. So, you know, everything's calculated and we always have a plan. And that's the most important part. It's not like we're shooting from the hip. It's like, all right, we're going to, you know, raise X amount right now, but this is the plan to try to get into out from that loan to this and this in the terms. And that's that. Everything was well communicated. And then when that didn't work, now we had to have another capital call, and this is going to take us to the end of the project.
Yeah. And are you really expediting the renovation now? So are you just going, you know, all day, every day, just to try and crank it out?
Yeah, one of our partners literally just incentivized one of the crews to finish building one for the end of the month, and said you guys will get a slight bonus for that. We have that accounted for, and because things have been coming in under budget and certain things have been over budget, but we have everything calculated correctly. So that makes it a little easier to offer that for them and incentivize it for them. So now they're busting through it and cranking through building one, and we're good. And now we can, you know, have it leased up by the end of the month, because the PMs already started doing showings in the, what's it called, the show unit or whatever you want to call it, right? So yeah, so everybody said, yeah, I like it. And we're doing moving fees and stuff like that. So we're getting rid of, we're moving away from security deposits, and we're really excited because everything's captured towards the NOI with that. So
Yeah.
we'll see.
That's great. And I guess long term, are you guys looking at, you know, finishing the heavy lift and maybe selling, or are you kind of, are you thinking like a 5 to 7 hold after that?
That's a great question, because brokers are solicitizing us and saying, hey, you know, we have buyers that want it for X, and we literally just kind of want to see the end of this a little bit and see our hard work come to, you know, some sort of something that we can see out of it.
Yeah.
But right now we had a plan we didn't, like a 5-year hold, I guess, on it, but everything's gonna be evaluated after it's all said and done. So because it's a small group and it's no passive investors in this, it's a case by case. It's whenever we cross that bridge, it's a conversation we're going to have and be like, can we move it into another one, or do we want to keep it, or whatever. I believe this group will probably 1031 into future assets, if you ask me right now.
Yeah. Yeah. And sometimes it's hard to pass up, but you get a really big offer with the check. It's like, hey, I can blow out my targets in half the time. So.
Yeah, you know what? I'm not even thinking about it, because if it happens, great, right? But whatever, it has to be all cash. Come on, man.
we'll have to have you back on in a year, and you can let us know what's going on with it.
Man. I appreciate that, man. Thanks for having me, man.
Yeah. So let's get into how real estate has impacted and changed your life so far, because, you know, it's, you know, going from a single family home to now doing these larger deals. How has real estate changed your life?
Well, it was my first deal that ever really made me notice it. And it wasn't till about 6 years after I lived in the home. So it was my first residential home. It was my first property me and my wife bought. We bought a foreclosed home, and we've made so many improvements to it, and now the home value is doubled since we bought it, right? And it's insane because we bought it at a good time, blah blah blah. But that right there made me realize the power of real estate. And from there, it took me a long time to comprehend it, because I never had that flipper's mindset. I never thought about flipping. I never considered it. And I just always like, all right, whatever, you buy at a house, you fix it, then you sell it at a higher, whatever. I just never processed it in internalizing that in my home value. And basically we did that, but we never sold, right? So now when I look at the value of my home, I said, all right, maybe we should buy my goal was with the single family was to buy a BER property, right?
Mm-hmm.
But I bought a turnkey property because it was a good opportunity, and I couldn't go ahead and basically bear the cash out. So now I'm like, okay, what do I do next? But I already know I want to go towards a multifamily. How do I get there? Partnerships, this, learning, education, that. But it was my first home that made me realize the power of real estate.
Yeah, no, that's huge. And like looking ahead, I know right now you're really focused on learning deal by deal. Where do you think you'll be in 10 years with your business?
Man, I have 5-year goals, but I don't look ahead for 10-year.
Yeah.
Actually, I have a 5, 10, and 15-year goal breakdown with only 5 points, where 1 is personal development, 2 is family, 3 is my children, 4 is my business, and I think it's 4 points, yeah, right? And that's it. And I do that for 5, 10, and 15. And I looked at it recently, and I know I have to already go and change it because things are fluid, right? And it's not because I've achieved certain things, it's because I know things have changed in the way I'm thinking and what I'm trying to align myself with. So what's funny is I'm always looking to build towards my future self. And when you ask me that, I don't know if I've ever looked at my 10-year future self. I've always looked at it in 3-year to 5-year chunks.
Mm-hmm.
So I do have that list,
Yeah.
but I focus more on 3 to 5-year chunks. So I really can't answer that, but I know it's going to be definitely with real estate involved. And I'm not going to tell you a door amount because I don't believe in kind of setting that I want 1,000 doors, whatever. I want to blow those numbers away. I don't want to set numbers and set standards so that if I don't hit, I never internalize it as a negative. I always say, all right, how do we adjust and achieve those better? So I always say, I want more growth. That's it.
Yeah, no, that's huge. So John, if somebody's looking to reach out, learn more about what you're doing, get in touch, where can they find you?
You can find me all over social media. I'm on Instagram. I'm on Facebook, John Fortes. Also, if you want to email me, john@cfigwealth.com. You can reach me at cfigwealth.com, the website, and just see what we're doing. Appreciate you. And I would be happy to talk to anyone. And another thing I've been doing is I recently, before this, I just got off a call. I've been talking with people who are looking to expand their business in syndication. And I've been dealing with a lot of people that are really, really new into the industry. So I'm putting together a white paper. So if you reach out to me, I'll be happy to share that with anybody. It's just 4 quadrants about the basically 30,000 foot overview of syndication.
Yeah, oh, that's great. I'm sure it's going to be a great resource. So be sure to get in touch with you if you want that. That's awesome. Well, John, just want to say thanks so much for taking the time today and sharing your success with us.
Thank you for having me, man. I appreciate the opportunity. Thank you.
Yeah, it was my pleasure. And to you, our viewers, I wish you well on your journey from purchase to profits. See you next time. That was great. Thanks so much for doing that.